Segment 25, procedures under customs. Purely this chapter is for MCQ purpose only, or maybe any theory question or case study type question could come, but first priority is MCQ only. Here we have the import procedures, that is what are the procedures to be followed by the importer and exporter is what we are discussing. In that, this is the bird's eye view of import procedures. Here this import procedure I am discussing in the context of a vessel. So this procedure will be revolving around 5 parties: exporter, customs officer, importer, master of the vessel and port trust authorities. These are the 5 people who are involved in this procedure. This is which procedure? Import procedure. What will happen? Just follow the numbers. So exporter will be handing over the cargo to the shipping company. As and when the cargo is handed over to the shipping company will give a document of title to the exporter called as bill of lading. And this bill of lading, exporter will be sending to the importer. Now importer, whenever he files a bill of entry, he need to file this bill of lading also to prove that he is the owner of the goods. So now the job of the exporter is completed. He just handed over the goods to the shipping company gave the bill of lading, that bill of lading is sent by the exporter to the importer. Now the goods are with the shipping company. The shipping company, that is a master of the vessel, will bring the ship to India. When he brings the ship to India, before arrival, he need to file one document with the customs officer. What is that? Arrival report or import manifest. So, arrival report and import manifest he need to file. If it is aircraft, it is departure manifest or arrival manifest. Arrival manifest. And if it is vehicle, it will be called as import report. But right now we are discussing it from the point of vessel. So therefore the document name is import manifest. So that will be submitted with the customs officer. That document will contain the list of goods which are there in the vessel. Now customs officer will verify whether these goods are allowed to be imported and will be giving to the master of the vessel grant of entry inwards. Thereafter the master of the vessel will enter into the port in India and deliver the cargo to port trust authorities. The port trust authorities will keep those goods in India, in the port. Now, with this, the master of the vessel burden is over. The goods are with the port trust authorities. This person is known as custodian. Custodian is not a customs officer. He is an officer of the port trust authority. Now, what will happen? Importer needs the goods. So, importer will be filing a bill of entry with the customs officer, and the customs officer will verify whether the value declared by this importer and the customs duty computed by this importer is proper or not. Thereafter, he will give an acknowledgement and he will recover the customs duty from the importer. Then, the customs officer will pass a out of customs charge order. Upon verification, return the bill of entry for payment, and upon receipt of payment, customs officer will pass a out of customs charge order. Now importer is having out of customs charge order. What does it mean? It means that he can take the goods outside. So outside the port means he paid the customs duty, but he has to prove that he is the owner of the goods. So how he can prove? So he will file bill of lading with the master of the vessel. Whenever he files bill of lading with master of the vessel, the master of the vessel will be giving a delivery order, DO. So which means he is the owner of the goods. Now these two orders, what are the two orders? Delivery order and out of customs charge order will be filed with the port trust authorities. Now port trust authorities know that, so he is the owner of the goods because the delivery order he is having, plus he also paid the customs duty. Now port trust authorities, that is custodian, will release the imported goods. So these are the 12 steps that is involved in import procedure. Now if it is aircraft, what will be the change? This bill of lading will be called as airway bill. So wherever this bill of lading came, so that will be replaced with airway bill. If it is vehicle, the name of this document will be called as lorry receipt or railway receipt. You can see that below. In case of import by aircraft, point number 2, point number 3 and point number 9 replaced with airway bill. Same way in case of import by vehicle, point number 2, 3 and 9 is replaced with lorry receipt or railway receipt. And then in case of aircraft, so this person will not be called as master of the vessel, he will be called as pilot in charge. Okay. So like that the name will change. Also there is no concept of grant of entry inwards now in case of aircraft. See this, in case of aircraft and vehicle, grant of entry inwards is not required for arrival but required for unloading of goods. Then all these import procedures and export procedures needs to be done. That is, here you may get a doubt, sir, master of the vessel will stop the vessel outside, he will swim and come and file the import manifest. No, yaar, everything will be electronic. So that will be through a portal, that is icegate.gov.in. This is the customs common portal. Now this is the overview of import procedures, and in this let's see what are the procedures to be followed by the person in charge and importer little bit in detail. You can see here compliance to be followed by person in charge. Who is the person in charge? Already we know. In case of vessel, the master of the vessel. In case of aircraft, the pilot. In case of vehicle, driver. And section 29 says that so they have to come to only customs port or customs airport or land customs station which is permitted for import. They should not go to any other port or airport, and they need to file one document. What is that? In case of vessel, import manifest. In case of aircraft, arrival manifest. In case of vehicle, import report. When it is to be filed? In case of import manifest and arrival manifest, that should be filed before the arrival of the vessel or aircraft electronically, whereas import report will be filed after arrival within 12 hours. Within 12 hours after arrival they will be filing, and that will be manual. Suppose if they file late, either import manifest or arrival manifest or import report, if they file late, there will be a penalty up to 50,000. In entire customs, wherever there is an offence that is committed, the penalty will be up to 50,000 rupees. Only one penalty provision we have in customs, entire customs up to 50,000 rupees. So you see a MCQ in that customs related penalty option A, B, C, D, wherever you have 50,000 that you select. That is only correct answer. Don't need to think also, because all penalties under customs will be up to 50,000. Then in case of import manifest and arrival manifest, if it cannot be filed electronically, it can be filed on manual basis also if principal commissioner or commissioner allows. Then they need to file passenger name record information along with import manifest, arrival manifest, import report, because in the cargo ship some passengers also will be coming, and these passengers may enter into India without proper visa, etc. That's why their information also to be given to the customs department to check whether they have valid visa and passport. In case of import by vessel, goods can be unloaded only after obtaining grant of entry inwards, but this condition is only in case of vessel. And goods go into the custody of a custodian as per section 45, and custodian shall ensure safe custody. Suppose when the goods are under the control of a custodian, if those goods are lost, pilfered means petty theft, then in that case custodian is liable to pay the customs duty. In case of pilferage, you just write down there, pilferage means what? Petty theft. Pilferage refers to petty theft. In case of this petty thefts, pilferage, custodian will be liable to pay the duty, not the importer. Then only those goods specified in the import manifest, arrival manifest or import report should be unloaded. Other goods should not be unloaded, and goods should be unloaded only at the approved place, and it should be unloaded under the supervision of a proper officer. That is, whatever goods that are mentioned in IM, AM or IR should be unloaded, and while unloading there will be one proper officer, and wherever they tell those place only the goods should be unloaded. And for unloading the goods, if small boats are required, that is when the ship is anchored in the outer space, from there if the goods are transported through boats, these goods should accompany a document called as boat note, because when the fisherman is bringing these goods in boats, when the coastal guard come, the shipper, people, the fishermen and all, what they do is that they will jump into the sea and they will run. Reason being, they are habituated to do this smuggling. Now coastal guard also will think that these are smuggled goods and they will seize those goods. But actually these goods are not smuggled goods because it is coming from the ship to the shore and the importer is ready to pay the customs duty with respect to those goods. That's why these goods should be having a boat note, so that when customs officers like coastal guard officers and all, if they identify also, they will understand that okay, this boat note is given by the customs officer, which means these are approved goods only, these are not smuggled goods. That is the section 35 boat note requirement. For unloading, if small boats are required, then he shall obtain boat note from the customs officer. Also, if unloading is done on holidays or after office hours, some extra charges is payable, that is known as merchant overtime charges. In GST we learned that this merchant overtime charges is exempted. So services provided by government to business entity, specific exemptions, merchant overtime charges is exempted. Then what are the compliances to be followed by importer? So far what we have seen is the compliance to be followed by person in charge. And what are the compliances to be followed by importer? How these previous points will be tested, they will be giving true or false statement. Explain with reference to import procedure whether the following statements are valid or invalid. Person in charge can take the ship to any port as per his choice. What is your answer? Invalid, because person in charge should take the ship only to the approved port or airport only. Like that, you need to write the justification. Then compliance to be followed by importer. Imported goods unloaded shall remain in the custody of custodian, who shall be responsible for imported goods, that and we need to file one bill of entry, then only the goods can be taken. So what is that bill of entry? We have 3 bill of entries. Bill of entry for home consumption, for clearance of the imported goods directly to the importer's place, or bill of entry for warehousing, also known as inbound bill of entry, for depositing the goods in warehouse without payment of customs duty, ex-bound bill of entry for home consumption, for clearance of goods from the warehouse upon payment of customs duty. Then what is the time limit for filing bill of entry? So bill of entry should be filed before the date of arrival. Sir, to avoid this, can I file even before that? Yes, even before that also we can file, but not before 30 days. So within 30 days before the date of arrival, either you file it before the date of arrival or even a prior date, but not before 30 days. So before the date of arrival minimum, maximum 30 days prior to the date of arrival. Suppose you filed a prior bill of entry and the vessel or aircraft is not coming within 30 days, that prior bill of entry will expire. Again you need to file a fresh bill of entry, and now this fresh bill of entry date only will be taken as relevant date for bill of entry purpose. Is it clear? So if the vessel does not arrive within 30 days of filing bill of entry, a fresh bill of entry is required to be filed. Then what is the late fee for delay in filing bill of entry? If it is exempted goods or dutiable goods, whatever it may be, the delay fine will be 5,000 rupees per day if it is up to 3 days. If the delay is beyond 3 days, it will be 10,000 rupees per day. And what is the maximum amount? In case of exempted goods, the maximum amount is 50,000, whereas in case of dutiable goods, the maximum amount will be 100% of duty payable. Suppose if the delay is 7 days. If the delay is 7 days, how much will be the late fee that will be payable? First 3 days, 3 into 5, 15,000. Then remaining 4 days, 4 into 10,000, that is 40,000. 40 plus 15, 55,000 rupees will be the late fee that is payable. But this is subject to maximum how much? 100% of duty payable. Then the customs duty, upon payment of customs duty, proper officer will pass one order. What is that order? Out of customs charge order. So pay customs duty after filing bill of entry, and out of customs charge order will be passed by the officer. And suppose if you are not filing bill of entry within 30 days after unloading the goods. So 30 days is the time limit after unloading. So belated only, actually it is belated, but even then 30 days. Within the 30 days, you are not filing bill of entry and clearing it either for home consumption or warehousing, the proper officer is having right to dispose of those goods. They can sell off those goods or they can keep the goods in a warehouse for 30 days. Either of these two they can do. If they keep the goods in warehouse, for how many days they will keep the goods in warehouse? Again 30 days. For every 30 days they will do a review whether to sell it off or to retain in the warehouse. Say this point. If goods not cleared for home consumption or warehousing within 30 days after unloading, such goods may be disposed of by the custodian or officer may deposit such goods in the warehouse. For how many days it can be kept? For 30 days, and beyond 30 days, for a further period of 30 days, commissioner should approve. So these are the procedures to be followed by the importer in case of import and person in charge in case of import. Now we are looking into export procedures. This export procedures is simple. It will revolve between person in charge, customs officer and exporter. What exporter will do? Exporter will take the goods to the customs officer. Along with that goods, he will be filing a shipping bill or bill of export. And if there is any customs duty, he will pay that customs duty. Customs officer will verify the goods, and if these goods are allowed to be exported, customs officer will pass a let export order to the exporter. Now, exporter will hand over the shipping bill or bill of export to the person in charge. Now, what person in charge should do? He should have obtained the grant of entry outwards to take the ship outside India, and after getting the permission to take outside India, should load those goods into the vessel. Loading of goods into the ship. In case of baggage, it can be loaded without any permission. So directly the goods can be loaded. Otherwise, so they need to get a grant of entry outwards, then only the goods can be loaded. And whatever goods that are loaded in the ship, the details will be submitted to customs officer in export manifest. In case of aircraft, that export manifest is called as departure manifest. In case of vehicle, it is called as export report. So these are the simple points that we have. Then in detail you can see complaints to be followed by person in charge. Loading of goods at approved place. There unloading at approved place, here loading at approved place. And there unloading under the supervision of proper officer, here loading under the supervision of proper officer. Then loading if required small boats, like if the ship is somewhere anchored in the outer space, again from shore to ship the goods will be taken. This do not require boat knot. Why this do not require boat knot? Anyhow these goods are having the shipping bill. So these goods do not require boat knot. Shipping bill is sufficient. And if the loading is to be done on holidays or after office hours, the exporter has to pay some extra charges. What is that? MOT charges. And the person in charge shall obtain entry outwards from the customs officer before loading the goods, and they will file export manifest in case of vessel, departure manifest in case of aircraft, export report in case of vehicle, and even they will be filing passenger name record information, because in the cargo ship they can carry some people also, and their details should be submitted and shall obtain permission to leave from India, so from the customs officer. Then what are the compliances to be followed by exporter? They will be submitting a shipping bill in case of vessel or aircraft, or bill of export in case of vehicle. Again it will be submitted electronically only, and they will assess the customs duty payable if those goods are dutiable goods, and they will obtain the let export order. These are the compliances to be followed by exporter. We don't have that many points related to export, because exports India is not having that much of stringent procedures, but for import we have lot of points to be followed. Then we have transit and transshipment of goods. What is transit and what is transshipment? If the vessel brings some goods to a port in India, unload some goods in that first port, and carries the same vessel to another port in India, these goods are said to be goods in transit. So one ship is coming to Gujarat port, Surat port, unloaded some goods in Surat port. Thereafter the ship comes to Kochi port and unloads the remaining goods. The remaining goods which is taken from the Gujarat port to Kochi port is known as goods in transit. Whereas if the ship which comes to Surat port unloads some goods in Surat and remaining goods are taken in a different ship, taken in a different ship. That different ship which brings the goods is known as transshipment. Say this. So in case of transit, transit means continuing transport of goods in the same conveyance. Whereas in case of transshipment, continuing transport of goods in any other conveyance. So there is a change in conveyance between transit and transshipment. One important point here is that whatever transit freight that we paid, it will be included in the value of goods for payment of customs duty. In my example, from Surat port to Kochi port, some freight we will pay an extra freight for carrying. Will that freight and insurance be included in the value of goods in Kochi for payment of customs duty? Yes, we need to include if it is transit. What if it is transshipment? Then that freight will not be included. Which freight? From Surat port to Kochi port, different vessel is bringing na. For the different vessel also some freight is payable. That freight will not be forming part of CIF price, which means that should not be included. So which freight should be added to freight? Transit freight should be added, whereas transshipment freight will not be. Got it? Then continuity bill or declaration. For doing this transit, any bill or declaration required? No, not required, because the same vessel na. Whereas in case of transshipment, they need to file a bill of transshipment or declaration of transshipment. Continuity in records and control. Will there be continuity of records in case of transit? Yes. Why? The same ship which is coming to the first port is taking to the other port. Continuity will be there. But in case of transshipment, there is no continuity in the records. Now, in the first port, that is in our example, Surat port, should they mention the details of the goods which are to be unloaded in Kochi port also? Yes. So in the first port or airport, they need to submit the details of normal cargo as well as transit cargo, normal cargo as well as transshipment cargo. You got it? Again, the ship will be going to Kochi port. Now in Kochi port, they have to file again import manifest. Yes. Again, they need to file import manifest, but in this import manifest, they need to submit what goods? Only those goods which they are bringing from Gujarat to Kochi, the Surat to Kochi. So IM or AM to be filed in the subsequent port or airport that contains the details of transit cargo and contains the details of transshipped cargo. Okay. So this is with respect to transit and transshipment. Understood here up to this? Okay, have a look into page number 180 related to import or export by post. Whenever goods are imported or exported by post, then the relevant date for determination of rate of duty under section 15 or 16 will not apply. In that case, we need to take date on which postal authority presented the parcel list to the proper officer or date of arrival of the vessel, whichever is later. This is in case of postal imports by vessel. Whereas in case of postal imports by aircraft or vehicle, we don't have these two, whichever is later. It is the date on which postal authority present the parcel list to proper officer. So usually what happens is that whenever the imports are made through post, so the postal authorities, we have to give the parcel list, like parcel list will be given by postal authorities to the proper officer. That is as equivalent to bill of entry. Normally we file bill of entry na. Instead of we filing bill of entry, postal authority will submit the parcel list. So that date or date of arrival of vessel, whichever is later. In case of aircraft or vehicle, only the date on which this parcel list is given to the proper officer. This is in case of postal imports. In case of postal exports, the date on which exporter delivers the goods to the postal authority. So that should be taken. So like you take a parcel, you go to the post office, you hand over the parcel to them. That date for that product, whatever is the rate of duty is applicable, that should be taken. That is this. Okay. Okay, say this. So we are discussing about import or export by post. What are the 2 points that we have seen in case of import by post? that is whenever the import is by vessel, the date on which postal authority present the parcel list to the proper officer or date of arrival of the vessel, whichever is later should be taken. Whereas in case of aircraft or vehicle, it is a date on which postal authority handed over the parcel list to the proper officer. But in case of export, what is the date that we have seen? As and when we hand over the parcel to the post authority, the date on which we deliver the goods to them will be taken. So this is just for MCQ purpose, it will be relevant. Wherever we discuss import or export by post, this postal authority is replaced with courier agency in case if it is imported or exported by courier. And one important factor here is that whenever we import by post or courier, we will not pay the customs duty. All the customs formalities will be completed by the postal authorities and the courier agency. They will pay the customs duty. Finally, they will collect money from us. That's the reason why for this, the procedure is little different. Okay. Then next we have faceless assessment under customs. What does it refers to? Whenever we file a bill of entry, previously that bill of entry used to be processed by the jurisdictional commissioner where we were importing the goods. But now the bill of entry, once the importer files, will be going to any customs officer across the country. So there is risk management system. This risk management system will allot the bill of entry to any officer, and that officer may not be your jurisdictional officer. For example, you are importing in Chennai, so need not be Chennai port officer. He can be Gujarat port officer or Mumbai port officer or Delhi also. Any officer will be taking up that particular bill of entry for verification. If everything is completed with respect to that verification of bill of entry, then they will communicate the same so that we will get a electronic clearance. Suppose if there is any discrepancy in that bill of entry, they will reject the bill of entry specifying the reason, and again we need to furnish the rectified bill of entry. So this is about the faceless assessment. So suppose if you get a theory question, short note question on faceless assessment, what you need to write? Bill of entry that is identified for scrutiny is assigned to an assessing officer. Is that assessing officer physically located in the customs station where we are importing? No. Who is physically located in a customs station which is not the port of import in the customs automated system. And basically it separates the assessment process from the physical location of the port of import using a technology platform. But from the importer perspective, there won't be any change. Normally, he will file the bill of entry, and that process he will be following. It is only the back end that it will change. That is with respect to this faceless assessment. Then, as per section 37 and 38, customs officer is having power to board any conveyance, and the person in charge of the conveyance cannot question the customs officer as to why the customs officer is entering his ship. So aircraft he cannot stop and enter, but vessel he can enter. Aircraft will be going on the top now, how it can be stopped. So customs officer at any time board any conveyance carrying imported or exported goods and may remain in such conveyance for such period as he may consider necessary. Also, customs officer may require the person in charge to produce any document and to answer any question. So pilot will be that is like pilot or captain of the ship will be driving the ship or aircraft. Customs officer can come and ask any question. Any question he need to reply. He need to stop driving and he need to reply to that. That's the power given. You understood? Customs officer may require person in charge of any conveyance to produce any document and to answer any questions. Why they create these sections we don't know. And then we have section 51A and 51B, electronic cash ledger and electronic duty credit ledger. These electronic cash and duty credit ledgers, like in GST, they want to bring under customs also. What is the objective of this electronic cash ledger? Generally what happens is that whenever the goods are imported, we file a bill of entry. The day on which we file bill of entry itself, we need to pay the customs duty. If there is any delay in payment of customs duty, unnecessarily we need to pay the interest. But the problem here is that as and when we file bill of entry, immediately we cannot pay customs duty because that bill of entry should be acknowledged by the customs officer that it is correct. Then until that point of time we cannot make the payment option will not show. So today morning we uploaded the bill of entry, by evening we did not get the confirmation, somewhere like 8 o'clock we got the acknowledgement that the bill is correct in all respects. Now at that time we cannot make the payment, maybe the payment gateway is not working. So due to that reason, what they are telling, you deposit the money in the cash ledger. The moment the bill is approved, we will make a debit from the cash ledger so that you will not have any interest burden. So amount deposited for duty payment is credited to this ledger, and whatever balance that is there in this ledger can be used for payment of duty, interest, penalty, and unutilized balance, if any, you can get as a refund. Then what is the purpose of this electronic duty credit ledger? It is a super purpose wherein government wanted to stop giving money to the exporters. So whatever export incentives, instead of giving into their bank account, so government will put into electronic duty credit ledger. So cash outflow eliminated. Now whatever money that is put into electronic duty credit ledger can be used for payment of customs duty on import, which means that if they give money to you, it's a cash outflow and they want to curtail that cash outflow. Anyhow, why you need to get that money? Because you are having some customs duty burden on import, correct only? No, don't worry. We will put the money in the credit ledger and use that for payment of customs duty on import. What if I don't have import, sir? Okay, you transfer that amount to any other person. Your credit ledger can be transferred. Sir, can I encash it, withdraw it? Impossible. So it is like a virtual money only. So refund payable upon export or incentives under FTP are credited to this ledger. Balance in this ledger can be used for payment of customs duties only. Can it be used for payment of interest, penalty, fees, etc.? No, only for customs duty. And unutilized balance cannot be claimed as refund. At least GST credit ledger is also okay, that in case of zero rated supplies, in case of inverted tax structure, we get the refund of the credit balance. But here nothing, we will not get. And in this regard, we have electronic cash ledger regulations and electronic duty credit ledger regulations. These two areas are actually very important for November 23 exam from theory perspective. Look into electronic cash ledger regulations. We have total 5 forms here. ECL 1 is electronic cash ledger. ECL 2 is challan for deposit under section 51A. That is, whenever we make a deposit into the ledger, there is a challan. We need to fill that challan, means who is the person, what amount needs to be deposited, etc. So that challan is ECL 2. And once the money is deposited into the electronic cash ledger, so we need to use it for payment of liability, for payment, that is against which duty, how much to be adjusted. So that is ECL 3, challan for payment of amount under Customs Act. So ECL 1 is cash ledger, ECL 2 is challan for deposit, ECL 3 is for challan for payment, ECL 4 is electronic duty payment ledger, and ECL 5 is application for refund of deposit. Because whenever we have some excess balance in the cash ledger, we can get it as a refund, right? So for that purpose, application for refund of deposit under electronic cash ledger. So whatever deposit that is made in cash ledger shall not accrue any interest. It is not like savings bank account where you put money, you get an interest, nothing like that. And deposit challan is valid for a period of 15 days. That is, once the challan is generated, within 15 days you should complete the payment. That is the meaning. Then what are the various modes of deposit? And this 15 days point is common in GST as well. So in GST also, once the challan is generated for making payment, it will be valid for 15 days. And what are the modes of deposit? Either you can make payment through net banking, NEFT or RTGS, over the counter up to 10,000 rupees in a day. But in case of GST, net banking, NEFT, RTGS, over the counter up to 10,000 in a tax period. That is, in a month it is 10,000. But under customs it is 10,000 rupees in a day. And in GST we have some more modes also. That is debit card, credit card, IMPS and UPI. So those modes also given. But here we don't have debit card, credit card, IMPS and UPI. Then this 10,000 rupees per day OTC limit not applicable for government departments or if the customs officer permits. So government department which is making a deposit of customs duty, or any importer, say he has cash but he has to make the payment of customs duty. If the customs officer permits, he can make a deposit in cash. That is the meaning of over the counter deposit. Then commission or charges payable for deposit. Usually in our home branch, when we are depositing money, there won't be any charges. But when we are depositing cash in any other branch, there will be some charges that will be payable. These charges, who will bear? Whether the depositor will bear or the government will bear? Depositor only will bear. So shall be borne by the person making the deposit. So once the payment is completed, a challan identification number shall be generated. And this challan identification number is the proof that the payment got credited to the government account. Then whatever amount that is there in this ledger, right now we are talking about which ledger? Electronic cash ledger, can be used for payment of anything, duties, cess, or even interest, penalties, or any other amount. Okay. Balance can be claimed as refund which shall be paid into the bank account of importer or exporter. But this electronic cash ledger regulations is not applicable to few people. This can be asked as a theory question. What are the cases where the provisions of electronic cash ledger regulations not applicable? Number one, those ports or airports where the customs automated system is not in place. So not every port or airport is automated. So those ports or airports where customs automated system is not in place. Then accompanied baggage, a passenger who is bringing his luggage and that luggage contains some dutiable articles. That is, I have seen lot of people posting videos about iPhone 15, that iPhone 15 is cheaper in US, so go to US or go to Dubai, buy iPhone 15 and you come to India so that you will be saving 30,000, 40,000. Even like I don't know who will pay the baggage duty. Will their father-in-law come and pay baggage duty? So baggage duty has to be paid. So it is easy to post the video, but once we are bringing that, if the customs officer is not catching, okay, easily we will come. What if he catches? So we have to pay baggage duty, and for suppression of that, we have to pay penalty up to 50,000. We can buy 2 iPhones India itself. You understood or not? So people will post. They don't have knowledge about all these things. So whenever we are bringing as baggage, we have to pay the baggage duty, and that's why that baggage duty can be paid normally, and for that electronic cash ledger regulations are not applicable. Then making payment other than duties under customs, IGST, compensations as interest, penalty fee or any other amount. So then what about other amounts we have? These are all the amounts we have now. No, we have demurrage charges, we have custodian charges. These are the charges not payable to customs department. These are the charges payable to Port Trust Authorities or Airport Authority of India. For payment of these charges, can we use the balance in cash ledger? No. The balance in cash ledger can be used for payment of any amount under Customs Act or Customs Tariff Act. But for payment of demurrage charges, ship demurrage charges, warehousing charges, custodian charges, etc., we cannot use the cash ledger balance. Number 4. Deposit with respect to goods imported or exported at international courier terminals. However, now it is applicable with effect from 1/5/2023. So for your exam, only 3 cases, electronic cash ledger not applicable. What are those 3 cases? Number 1, the port or airport where customs automated system is not in place. Number 2, unaccompanied baggage. Number 3, so payment of charges other than Customs Act or Customs Tariff Act. Okay. Now we are moving on to electronic duty credit ledger regulations. That is, what does it say? Whenever you are importing any goods and upon payment of customs duty, and these imported goods, when you are exporting, you are eligible for various incentives under customs and foreign trade policy. One such incentive under customs is duty drawback. So import goods, pay customs duty. Upon export of that goods, you will get duty drawback as an incentive. Same way under foreign trade policy also, we have some incentives called as RODTEP, rebate of duties and taxes on exported product. And these incentives, instead of giving into bank account, that will be credited into duty credit ledger as a scrip. And that particular scrip can be utilized for payment of basic customs duty only. Remember, you cannot use the duty credit available in the ledger for payment of any other customs duty. Can you use it for payment of IGST? No. Additional customs duty, safeguard duty, anti-dumping duty? No. Even for social welfare surcharge, we cannot use that. So whatever balance that is there in duty credit ledger can be used for what purpose? Only for payment of basic customs duty. Very, very important point. So whenever a shipping bill or bill of export is presented and having a claim of duty credit, that will be processed and one duty credit scrip will be generated and that will be given. Scrip means it will have one number. One scrip number will be there. That scrip number will be given. And whenever we are importing, we file bill of entry. The scrip number we need to enter there so that the money gets debited from the duty credit ledger. That's how it works. Then the e-scrip will be valid for a period of 2 years from the date of its creation. Stupidity here. In GST credit ledger balance, there is no validity. You can carry forward for a number of years. But in customs, duty credit ledger is valid for a period of 2 years. Means once that scrip is created, that scrip will have a validity of 2 years. Means what? Within 2 years, we should use it for payment of customs duty. So from the date of its creation and any duty credit in the e-scrip remaining unutilized, that shall be lapsed. For example, 2 lakh rupees they created a scrip. We used 1,50,000. Still some 50,000 rupees is there. That will be lapsed. We can't do anything with respect to that once 2 years period is over. Further duty credit in the e-scrip that has been lapsed shall not be regenerated. And the ledger including e-scrip and the transaction made therein shall be visible in customs automated system. Then sir, is there any way out? So because I have a scrip, 2 years validity, for the next 2 years I am not going to import that much. What is that I can do? Then you can transfer the duty credit scrip to any other person. Transfer of duty credit in e-scrip shall be allowed within the customs automated system. Means to whom we can give? To another importer. And that importer, what he can do? He can use it for payment of customs duty. Now, definitely full amount you will not be receiving. For example, I have a duty credit scrip for 10 lakhs. Now, you will not be interested to pay 10 lakhs to me. You will say that 10 lakhs I will pay to government. So, why I need to pay you? So, therefore, definitely I need to sell this at a discount. So, I will be selling for 9 lakhs or 8 lakhs. This is a loss for me. On that, should I pay any GST? No. Sale of duty credit scrips is exempted under GST. This is for your information. Of course, it is not there for exam. Sale of duty credit scrips is exempted under GST. But this sale when I am doing, I get some money in cash and you will get credit of the duty credit scrip amount. But again in that there is a twist that they have kept. You cannot transfer part of the scrip. Which means I had one scrip, 2 lakhs, 1,50,000 I used, still 50,000 is there. Can I transfer 50,000? No. Either full scrip I can transfer or I cannot transfer. Means that will be lapsed. Purposefully, wantedly, they wanted the balance to be, gone. Okay. So this cashback offers and all many people will be giving. And cashback they will give with a condition that you have to use within that period. So we are forced to use. Suppose if you are not using, that will get expired. And intention behind giving this is that only. Like 100 rupees they will give. But in that website, none of the product will be somewhere like 100. Everything will be somewhere 500, 600 only. I don't know whether you have seen that. And we are forced to pay extra only. So transfer of duty credit in e-scrip shall be allowed within the customs automated system from the ledger of a person to the ledger of another person. The duty credit available in a e-scrip shall be transferred at a time for the entire amount. Underline, at a time for the entire amount. Means transfer of duty credit in part shall not be permitted. So these are the points related to electronic duty credit ledger. Then the last area in this procedures is import of goods at concessional rate of duty rules. So what are these rules? For what purpose? Say you are one manufacturer. You are eligible for import of certain goods for manufacture of notified goods without payment of customs duty. Say you are manufacturing COVID vaccine. You can import the raw material required for making COVID vaccine without payment of customs duty. Now, how to import those goods? You need to follow this procedure. Import of goods at concessional rate of duty. Or you are a service provider. You are into a tech company. You imported some equipments, hardware equipments for use in the education industry. Now you can import it without payment of duty or at concessional rate. Again, what is the procedure that you need to follow? You need to follow this procedure. For you, these rules will be applicable. So to whom these rules will be applicable? There is a manufacturer or a service provider who is eligible for a exemption notification. That manufacturer or service provider is eligible for exemption notification either to import goods without payment of duty or to import goods at concessional rate of duty. Now, what is the purpose for which you will import that goods? To manufacture the notified goods or to provide the notified service or to supply it to a specified end use recipient, that is supplied to an intended person in the notification. So, what is that you will do with that goods here? Either you will manufacture the notified goods or you will be providing the notified services or you will be supplying it to a specified end use recipient. These three things you can do, and you can import the goods either without payment of duty or at concessional rate of duty. And those goods which are brought by a manufacturer can be used for, can be used on his own, or he can get it done on a job work basis. Then that is COVID vaccine you are manufacturing. Either you can do the manufacture or you can get it done on a job work basis. But job work with respect to gold, jewelry, precious stones and metals is not permitted. Now, so from this we understood to whom these rules are applicable. Now, you are that person. You are importing the goods either without payment of duty or at concessional rate of duty. You are eligible for a exemption notification. Now, what is that you need to do? You are located in one place. Okay. Say you are located in Coimbatore, Tamil Nadu. Now, you need to import the goods into Chennai port. Okay. You are located in Coimbatore and you need to import goods into Chennai port. Now, first you make an application that you are eligible for import of goods without payment of duty or at concessional rate. That application you will make in the Customs Common Portal in form ICGR1, and even you will execute the bond and security. Thereafter, the Common Portal will give you the approval, and the approval will be import of goods at concessional rate of duty identification number. So, one IIN will be given to you. So, this IIN you code at the time of import in the Chennai port, so that the customs officer in the Chennai port will not collect any customs duty from you or will be allowing you to clear payment of customs duty at a concessional rate. You understood? So, this IIN you can quote in Chennai port, wherein you can import and clear without payment of duty or at concessional rate by furnishing bill of entry with IIN and bond number. And thereafter, as and when the goods are brought to your place, intimate to the portal if there is any short receipt, because at the time when you make application, you would have specified how much quantity of the goods that you need. Now, there may be a short receipt. That short receipt you need to communicate to the portal. Now, using that goods imported, either complete the manufacture or complete providing service or supply it to the specified end use recipient. Still you have some goods, maybe unutilized goods or defective goods. Within 6 months from the date of import, either export those goods back, because these goods enjoyed the exemption now. So, export those goods back or sell it in India on payment of customs duty along with interest. Again, I am repeating, you imported it for a particular purpose. You did not use it for that purpose. Either export it back or you sell it in India upon payment of customs duty along with interest. And what is the time limit within which you need to do that? 6 months. Or use it for the purpose for which you have imported. Now why we need to pay interest? Because you have imported it long back and at that time you did not pay customs duty. So now you are selling in India, pay that customs duty what you did not pay and pay the interest also because there is delay in payment of customs duty. And these are the forms in this regard. ICGR1 is prior information to be provided by the importer. ICGR2 is intimation regarding non-receipt of goods imported to be provided by the importer. ICGR3 is the monthly statement and ICGR3A is the details of goods consumed for immediate recredit of bond. That is ICGR1, first you need to import without payment of duty that application. Suppose if there is any short receipt, ICGR2, and whatever you are doing using that goods monthly you need to communicate so that they will be releasing the bond. Because you have executed a bond initially, now only when you complete the purpose for which you imported the goods, the bond gets released. If you want the bond to be released immediately, so ICGR3A, you don't want to wait for the month end also, you want it to be released immediately, ICGR3A. Then we have some FAQs in this regard. What is the information to be submitted? Think logically. What information we need to submit? First, what are the type of goods that we are importing and from where we will import, how much quantity we will import, what we are going to do with respect to those goods and to whom we are making the supply, specified end-use recipient, or what are the notified goods we are manufacturing, what are the notified services we are rendering, under which notification we are exempted and which place we are manufacturing, all those basic details. Okay, definitely you will not get this question. If you get this question also, you will write all bullshit like audit exam. So therefore they will not ask. Then what is the procedure for sending the goods for job work? That is, I told you, a manufacturer who is importing goods under these rules can either manufacture on his own account or he can get it done on a job work basis. But whenever he is sending the goods on job work basis, the details should be mentioned in the monthly statement and these goods should be under the cover of a delivery challan plus e-way bill, and whatever goods that are sent to job work, it should be brought back within 6 months. So these are the 3 points you need to remember. Whatever goods that are sent on job work should be reported in monthly statement and it should be under the cover of a delivery challan plus e-way bill, and within 6 months those goods should be brought back. Then can the imported goods be transferred from one unit to another unit? Of course it can be transferred. Again the same process. So these details should be mentioned in the monthly statement and it should be under the cover of a invoice plus e-way bill. Why? From one unit to another unit, when we are taking the goods, it's a transaction between distinct persons. Transaction between distinct persons, it should be under the cover of a tax invoice plus e-way bill. Then what is the procedure for supplying imported goods to this specified end-use recipient? Same. All these 3 questions, same answer. You have to report these details in a monthly statement. It should be under the cover of an invoice plus e-way bill, and the specified end-use recipient who is receiving these goods should maintain the records related to this. So up to this FAQ 1 to 4 is not important for exam, but 5th one is, can the capital goods be imported under these rules? Yes, capital goods can also be imported, but that 6 months restriction is there na, that within 6 months they should use it, otherwise they should either export it or sell. That is not applicable for capital goods. So capital goods can be imported at concessional rate for use in manufacture of notified goods or providing notified service. After that, the goods can be cleared in domestic market on payment of duty and interest at depreciated value. What is the depreciated value? You can see in FAQ number 9, what is the depreciation? We need to take depreciation as 4% for every quarter or part thereof in the first and second year, then 3% for every quarter or part thereof in the third and fourth year, 2.5% for every quarter or part thereof in the fourth and fifth year. So these percentages you can see. So just remember the percentages: 4, 3, 2.5, 2. Okay, 4, 3, 2.5, 2. When is it 4% for every quarter or part thereof in the first year? Then when it is 3, second slab is 3, second year and third year, fourth year and fifth year. Thereafter every year it will be 2%. You understood or not? So this is how you need to do the depreciation. Value of imported goods minus this percentage, and you will get the depreciated value of the goods. On the depreciated value of the goods, you need to pay the customs duty, and you also require to pay the interest. What is the rate of interest under customs? Always it is 15% per annum. What is the rate of interest under GST? 18% per annum, and under customs it will be always 15% per annum. So how much interest is payable? See FAQ 7. At the rate of 15% per annum from the date of import of goods till the date of payment, you need to pay this interest. And here customs duty on above shall be equal to difference between the duty leviable on such goods but for the exemption availed and that already paid if any at the time of importation, and whether this depreciation quarter should be computed based on calendar quarter or 3 months taken as one quarter. It is based on calendar quarter only. Calendar quarter means what? Like in GST how we did, the same way. So kindly make one correction here. So this point you remove. This point you remove. So this depreciation should be based on calendar quarter. So here quarter refers to what? Quarter refers to calendar quarter. Calendar quarter means, like suppose if it is April 15th, okay, then count April, May, June as one quarter. Suppose if it is June 25th, count April, May, June as one quarter. In that calendar quarter, any one day it comes, you count that as one quarter. Then when unutilized or defective goods should be exported within 6 months. Is that 6 months time limit applicable in case of capital goods? No. And all these data needs to be reported in a monthly statement, and that monthly statement is ICGR 3 to be filed by 10th of the month following every month. So these are the points that you need to remember. With this, procedures under customs is over.